Good morning, afternoon, or evening, and welcome back to Lamb's Cryptoverse. Today I'm going to discuss with you how I kind of predicted that Ethereum prices would decline. And only since August, especially since the last few weeks, Ethereum's gone down dramatically. About, from 2,000 down to 1,400. That's about a 30% decline. And most of that decline was over the last few weeks. And I kind of figured out why and how that would happen, but there was something I didn't understand. But even though I didn't understand it, I was still able to make a conclusion that Ethereum would decline. Remember, this is not financial advice, and we're all going on this crypto journey together. So let's try and learn something. And if there's something I don't understand that you could help me, please reach out to me. So let's get started. I'm going to minimize myself here. So the first thing is Ethereum prices. Oh, an ad. The first thing you can see that Ethereum prices have gone down from about $2,000 in August, around mid-August, down to today's under $1,400, or about $1,400. That's a big decline. And why? I think this occurred because there was around here, there was a lot of optimism over the merge. And the merge has been a success, but as you can see, it was a sell on a news event. So let me tell you why I thought Ethereum would decline. So let's go through some of these charts. The first one is open interest. There had been a big increase in open interest. And I didn't know if that was long open interest in Ethereum or short open interest in the futures market. So this is what got me confused, and I wasn't sure what to do. Now, usually you get a big open increase in futures as the market is going up. So you could kind of see that as a contrarian indicator. But here's the problem. If you look at the futures, the funding rates for futures, they went negative here. Over the last month, I think it is. Yes, since mid-August, they went negative. So that's very confusing because, and maybe, you know what, let's drill down into that. Let's go over the last month. You could see it was a huge decline in funding rates. And basically, this is what traders are paying for asset managers or commercial dealers to take the other side. Meaning, if you look at just at this alone, it looked like investors and hedge funds and speculators were selling Ethereum short. So here's where I got confused and I did not understand, because from this futures market, from this funding rate, it looked like speculators were going short. But if you look at something else, at the put to call ratio, you see the opposite. Now, this is the open interest by the put to call ratio on a Bitcoin and Ethereum. So today we're going to focus on Ethereum, which is red here in the chart. And you could see here that we had an all-time low in the put to call ratio on Ethereum. It hit as low as, I believe it hit 0.23, maybe 0.22. Again, that's the lowest that we've seen. So this means that the speculators were bullish on Ethereum. So from a contrarian point of view, this made me bearish. So you might say, wait a minute. If you look at this is the opposite. It's saying that speculators are bearish. But if you look at this, it's saying that speculators are bullish. So how did I know how to read this data and how to interpret it? Well, this is where I get my answer from. I look at the price. When everyone was getting bearish on futures, I saw that the price was rising dramatically. And in almost every case, when the underlying price is rising dramatically and sharply, that means that they're usually getting bullish. So from a contrarian point of view, I decided to look at the options data, not the futures data. And so I interpreted this options data from a contrarian point of view as being very negative, meaning that 3/4 of the options were for call options, right? Because the put to call option data was very negative. If we get our calculator, let's just do the inverse. If we're getting a point, let's pick a round number, 0.25. So if the ratio of the put to call ratio for Ethereum is 0.25, you take 1 divided by 0.25 and you get 4. So you get 4 call options for every put option. So that means that speculators were buying puts like crazy. And if you look at the strike prices, I have some other data on this, they were buying strikes that were out there. So let me show you the price here. They were buying strikes up here. So I don't have the data for that in front of me right now, but basically the options call buys were buying strikes that were out of the money. So that's showing that from a contrarian point of view that there was too much bullishness, too much speculating, despite what we see here with funding rates. And just to confirm that, I looked at the fear greed index, and the fear greed index was at a greed level. We hit around 71. And if you see here, that green is at a greed index level. So when you're hitting 71, from a contrarian point of view, that means everyone's greedy and the market usually turns and goes down after this point. And that's exactly what happened. So I know this is pretty confusing, but I just want to explain to you how I think. Again, I'm going to repeat it just so that everyone gets a takeaway. Number one, I wasn't sure whether to be bullish or bearish when we were at this point here. But my equity sentiment indicators were saying we should go bearish. And the same thing with crypto. There was a lot of greed at this area. And two, I said, even though the funding rates were going negative for perpetual Ethereum futures, I said, let me focus on the put to call ratio. From a contrarian point of view, such a low put to call ratio in Ethereum only means that everyone's getting very bullish. Everyone's speculating too much on Ethereum. And that's why I did the opposite. I said, whoa, prices are going to go down. And that's what happened. So where are we now? What should we do now? Well, now prices have come down a lot. And you can see here that we moved from greed to, to fear. Not extreme fear, but to fear. So this is a limbo area. This is an area where you shouldn't go bullish and shouldn't go bearish. But if I had to call it, if I had to say something, I would be more bullish than bearish because prices have come down. So my key takeaway here, if you're not sure what the market's thinking, always look at prices. And right now, prices are coming down. Well, thank you very much for listening to this confusing episode of Lam's Cryptoverse. And please like us and put in the comments what you would like to hear more of.